The rising hostility between the United States and Iran is setting off alarm bells across the global energy sector. The world is witnessing the terrifying weaponization of the Strait of Hormuz, where military posture threatens to block the world's daily oil supply. For India, the fallout of this impending conflict promises to be far more devastating. India has suffered directly and indirectly with every single war the Americans have fought in West Asia. From the soaring inflation of the Gulf War to the disrupted supply chains of the Iraq invasion, these distant battles always exact a massive toll on the Indian economy. Now, as the specter of a full-scale US-Iran clash looms, Indian consumers are once again on a direct collision course with skyrocketing petrol and diesel prices. Patterns from the past 25 years illustrate how Middle East crises have repeatedly driven such increases. The 2003 US-led invasion of Iraq provides a clear example. Leading up to the conflict, Brent crude hovered around $30 to $35 per barrel. As military action commenced and instability persisted, prices climbed steadily, exceeding $40 shortly after and contributing to a broader rally amid fears of regional spillover. The disruption to Iraqi exports and ongoing security concerns added a sustained premium, demonstrating how even partial losses from a major producer can elevate global benchmarks. The 2011 Libyan civil war during the Arab Spring offered a more acute case. Unrest removed nearly 1.5 million barrels per day from the market, a relatively small share globally, but enough to spark panic buying. Brent crude surged from around $100 per barrel in early 2011 to peaks above $120 per barrel by April, with intraday highs nearing $119 amid fears of contagion to larger producers. Prices later moderated as other OPEC members increased output, but the episode highlighted the market's sensitivity to perceived threats in the region. More recently, the September 2019 drone attacks on Saudi Aramco facilities, which temporarily halved the kingdom's production or about 5% of global supply, caused an immediate 15 to 20% spike in oil prices, the largest single-day jump in decades. Brent opened sharply higher, reaching intraday levels above $71 per barrel before partial recovery as Saudi output resumed, yet the event underscored how targeted strikes can provoke outsized reactions, with insurance and freight costs rising in response. These historical surges occurred against backdrops of limited or proxy conflicts. A full-scale Iran-US war would likely prove more disruptive, potentially restricting flows through the Strait of Hormuz and damaging facilities across multiple countries. During the 1980s tanker war phase of the Iran-Iraq conflict, similar attacks drove insurance rates prohibitively high and added several dollars per barrel to prices. In today's tighter market, with reduced spare capacity among producers, analysts have projected that a 5 to 10% global supply loss could push Brent above $100 to $120 per barrel from current levels around $70. Such a $30 to $50 increase would equate to retail hikes in India exceeding 15 to 30 rupees per litre over time, compounded by rupee depreciation under capital flight pressures. The mathematics of India's vulnerability is evident in its scale. Daily imports of around 4.8 million barrels, mostly by sea, mean that even modest per barrel cost escalations from higher insurance or rerouting accumulate rapidly. A sustained $20 per barrel premium, plausible in a prolonged conflict, would inflate the annual oil import bill by tens of billions of dollars, translating through refining and distribution into broad inflationary effects on transport, goods and services. While global oil markets have shown resilience in some recent Middle East flare-ups, owing to increased non-OPEC supply and demand moderation, the unique choke point risks posed by Iran remain unmatched. Past crises over the last quarter century confirm that threats to Persian Gulf stability reliably impose costs on importers like India, where affordable fuel underpins economic activity. An Iran-US war, should it materialize, would thus extend far beyond the region, manifesting directly at Indian fuel pumps through mechanisms refined by decades of market history.